Hey guys, it's Craig from Well Accountants. Today's video is in response to a comment from one of our other videos. Z Patrick writes, "Thanks for the videos on QuickBooks. I'd be interested in a deeper dive into the payroll side superannuation process for a small husband-wife setup. Compared to say Xero, pros and cons." So great comment. So firstly, the first thing I would say is whether paying a wage is going to achieve the outcome you're looking for. Typically in a husband-wife setup, paying a wage is the sole reason is to divert the profit for a more tax-effective outcome, which is fine. However, there are sort of risks and downfalls to that. So firstly, obviously, you're going to have to pay for accounting software. You have to pay superannuation on a quarterly basis, and if you don't, and you end up paying it late, it's non-deductible. So that's a big sort of penalty there. If you calculate the withholding tax, or the software does, and you get it wrong, when you try and claim the wages as a tax deduction, it's non-deductible. However, it still would be assessable by your spouse, and that would mean effectively you're paying tax on the same money twice. If you set up your structure in the way that you want, or it's effective, you can achieve the same outcome. Typically with a trust, you can achieve that outcome. You can also with a company, if it's set up correctly. If you're in a situation where it's not effective, there may be ways to restructure. Reach out to us, let's see what we can do to make that change. However, there are other reasons why you would still want to pay a wage, and that's what we're going to talk about today, what you'll need to do to go through that process for a husband and wife setup. So firstly, what features would you want to, within your software? So the first thing is you want to set up yourself as an employee. So we're going to just quickly go over that today. So if we go over to QuickBooks over here, we've got the employee screen. So you can just add yourself as an employee. There's also a self-setup, which is good if you're not a husband-wife setup. You can just put in their email and they fill out all the information. Typically, it's going to ask for things like tax file number, like all your personal information, what your hourly rate is, all that sort of standard questions. We're not going to cover that just because it's more of a personal nature. But once you've set yourself up as an employee, so in this demo file, I've gone ahead and set myself up here. So pretty straightforward. So over in Xero here, we've got demo file here. So once again, you just go to employees. So let that load. So you can see that you got new employee, and once again, you got the Xero Me, which is it's the same as the self-service. Put in the email, they fill in the rest, and then you just check it. So the next step is you want to actually process a pay run. So you determine whether you want to do weekly, fortnightly, monthly, whatever pay cycle you feel is good for yourself. So in QuickBooks, we've already got a pay run here, but you just literally just click new pay run. And you just put in whether, weekly. You can change, set up a different pay schedule, which is pay cycle, to say fortnightly. So you just go create. So you can see, you can click into each employee and you can just check, like hours, rates, all that sort of stuff. It usually does all the calculations for yourself. Pretty straightforward. Over in Xero, similar, you just go into pay employees. So we've got the pay runs here. One thing I want to point out at this stage, you just click into the employees and you can once again just change the rates and stuff. All the tax, everything calculates correctly if you've set it up. Put their tax file number in, all that sort of stuff. So the main difference here is that you can actually make multiple pay runs with QuickBooks ahead of time, which is a nice little thing, especially we find as an accountant. We may have, clients come to us and we've got to do 20 pay runs. It's unfortunate that happens. But with Xero, it only lets you do one at a time. So it becomes very time consuming if you fall behind. But with a husband and wife setup, whether you do it one after the other and you don't need to send for approval, it becomes very straightforward. So once again, you just click post pay run and then the journal is done in the file and you don't need to worry about the calculations. Same within QuickBooks. Once you've determined, the hours and the rates are right, you just finalize pay run and it does the journal in your file. So once it's processed, next thing you want to do is lodge it with the ATO, so through single touch payroll, and also send out the pay slips. So because this demo file can't really show you how to do that, but you just click, once you finalize, it just gives you the option to submit the pay slips. Also, to connect the single touch payroll with QuickBooks, it's pretty straightforward. So it actually has the option here. You just click this. So you just call the ATO and then you tell them the identifying number that comes up on here, and then it's connected. And then it means you'll be able to, when you're in the pay run, you'll be able to click submit after it's been finalized. So you click finalize, and then once you've done that connection step, it'll let you lodge it with ATO. So over in Xero, just go back out of that. So similarly, when you submit the pay run, it'll say that it's not lodged here, but you'll just go up here and go single touch payroll, and it's literally the same thing, like call up ATO, file it, that sort of thing. You just click file like this. After you post, it'll show us, being able to file that. So pretty straightforward. There's nothing else that needs to be done at that point. And then when you get to the end of a quarter or month, depending on how much withholding tax, so this tax here, same with QuickBooks. If you're withholding tax, then you need to pay that to the ATO on a business activity statement. So you can see the withholding taxes here, 882. And then over here, we've got these amounts for these employees. So typically when you get to the end of it, it's usually quarterly if you're under 25,000 withholding in a year. So you'll pay this to the ATO. So just an additional step you've got to be aware of if you're going down this route. Also on a quarterly basis, you need to pay the superannuation, which is this column here, superannuation there in Xero. In QuickBooks, it's over here, super guarantee, $196. So you finalize all the pay runs and you want to pay the super. So how do you do that? So within QuickBooks, so go back to the main screen, we go to reports, and then you go super payments. So you just click register and go through it. The QuickBooks clearinghouse that they use here is Beam. So what a clearinghouse is, you're sending not only the payment but also the information about who got what, how much super, and then they pay it off to whichever funds the employees have. So literally straightforward. Beam actually has the option of direct debit, so you put in your BSB account number and it just takes the money. Very streamlined. Obviously you're going to want that. Over on Xero, it's the same thing. You just go superannuation up here. Okay, so I can't actually show you, but it's the same process. You select the quarter and then you go process. Just mentions here you need the premium subscription. We'll just talk about a bit more in detail for that later. But once again, it's that straightforward. You just select how much, and then you make the payment to the clearinghouse, and then the clearinghouse then passes on the money to the members fund, the employees fund. Pretty straightforward. Okay, so we're going to talk about the last thing we'll mention is the pricing, which is the main difference. So if you've noticed that both Xero and QuickBooks, they have both features. You know what I mean? They have everything you need. The QuickBooks pricing. Is it on this screen? We've got standard payroll. So it's that $5 a month. It has everything you need here that we mentioned. So it has the self-service, the single touch payroll, the super stream. So that's the super payments, reports, all that sort of stuff. It's an extra $10 a month to get the rostering. But if you're a husband-wife setup, you're not going to want to pay for that. So just the $5 per month. So you're looking at $10 a month. Over in Xero, so we go down to their plans. So they have a payroll only plan. So they've got 1 to 4 employees, $10. So you'll find that it's the same price. One thing, and pretty much the only difference here is this payroll only plan doesn't actually include the super payments. So you can actually see it up here. None of these plans. It's only this plan here, the Premium 5, which is $76 a month, includes the automated super. When you go in and sort of pay, you can actually see in this screenshot. So you can see that it's not included. The auto super is only included with the Premium 5. Unfortunately, we hope that gets changed in the future. It should be included. It's not the end of the world though. You can still make the superannuation payment. What it means is you need to use a different clearinghouse. So if you use if you go to any of the industry funds, they have free access to those, like Australian Super, CBUS, all that sort of thing. You just register an account with them, you'll be able to pay the money to their clearinghouse, which will then pay the money off to the members fund. The reason why we don't really recommend that is it's a lot of additional work, obviously, to set it up, but also transposing the numbers across. There's a chance for error. So we don't recommend that. Even if you do an export-import process, don't recommend it because there's always chance for error there. So yeah, thanks for watching the video. We hope it was helpful. Give us a like, or if you have any other questions you want us to answer, put it in the comments below. Otherwise, thanks for watching the video.